What's up, Bitcoin Bulletin crew? We're diving straight into the action with a massive whale distribution that's got the market talking. Is this a sign of trouble or just a temporary shakeup before the next big move? We've got the details on over 100,000 BTC, worth billions, exiting major wallets. What does this mean for Bitcoin, Ether, and XRP as we head into September? Next up, the U.S. Treasury is facing a critical 90-day deadline to map out its strategic Bitcoin reserve plans. Custody partners, legal authority, cyber safeguards, it's all on the table as the government considers its first-ever federal crypto hoard. This could be a game-changer for institutional adoption. And hold on to your hats, because Paraguay is setting a new standard for Bitcoin mining sustainability. We're breaking down their incredibly welcoming regulations and how companies like HIVE Digital Technologies are leveraging massive hydroelectric power to mine BTC responsibly. This is how the future of mining looks. Finally, we're looking at the evolving landscape of Bitcoin staking, with platforms like Gate offering competitive yields. But what are the real risks involved, and how does this fit into the bigger DeFi and institutional portfolio picture? Stick around as we break it all down, and make sure you hit that subscribe button and ring the bell so you don't miss a single update. Bitcoin staking rates, the yield hunter's new frontier. Bitcoin staking is evolving, moving beyond its early stages to offer intriguing yield opportunities, though it's not quite the native consensus staking you might expect. Instead, platforms are leveraging derivative and liquid staking models to turn your idle BTC into income. Think of it as putting your Bitcoin to work, but with a unique set of considerations. Leading the charge is platforms like Gate, which are presenting some truly eye-catching yields. But here's the crucial part. This kind of return doesn't come without its risks. We're talking about significant security concerns, the ever-present specter of regulatory uncertainty, and the reliability of the platforms themselves. The counterparty risks are very real. While the infrastructure supporting staking, including insurance and risk management tools, is steadily improving, the big institutional players are still approaching with caution. They're primarily interested in strategies that are both regulated and built for the long haul. For the average user, Bitcoin staking right now offers limited opportunities, and it's really best suited for those who are well-informed and comfortable taking on a certain level of risk. It's still a specialized and somewhat experimental corner of the crypto world. However, as the technology matures and the regulatory landscape becomes clearer, we could see this ecosystem expand dramatically. For now, though, tread carefully and do your homework. But before we dive deeper into the risks and rewards of staking, get ready for a seismic shift in the market as billions in Bitcoin are on the move. Could this whale distribution spell trouble for BTC, Ether, and XRP? Whale alert! Bitcoin faces September test amidst massive distribution. Bitcoin is navigating choppy waters as the market grapples with the largest whale sell-off in over 2 years. With over $12.7 billion worth of BTC, approximately 100,000 coins, exiting major wallets in the last 30 days, the pressure on spot prices is palpable. On-chain data from CryptoQuant highlights this significant distribution, with analyst Coeconomy noting it as the largest this year, pushing prices below $108,000 last week. This aggressive trimming of positions by major players mirrors the activity seen in July 2022 and suggests continued downward pressure in the coming weeks. The sales have coincided with a slowdown in ETF inflows and thinner trading volumes, leaving the market sensitive to macroeconomic catalysts. However, the longer-term outlook remains surprisingly robust. Bitcoin has only dipped 13% from its mid-August all-time high, a far milder correction than historical patterns suggest. Analyst Dave the Wave points to the one-year moving average, which has climbed substantially, indicating a strong structural uptrend likely to persist. Ryan Lee, chief analyst at BitGet, reinforces this view, citing a record 14.3 million BTC in a liquid supply, with a vast majority held by long-term holders. This confidence in Bitcoin's enduring value is a significant bullish signal. Lee anticipates Bitcoin stabilizing within the $105,000 $118 $0.000 range, buoyed by ETF demand and positive technical indicators. Ethereum is also poised for gains, potentially trading between $4,100 and $4,600, especially with upcoming network upgrades and DeFi catalysts on the horizon. Altcoins like XRP, Solana, Dogecoin, and Cardano are showing modest gains, indicating a broader market recovery, though total crypto market capitalization remains below its 50-day average, a point of concern for some analysts. Sentiment is cautious, with traders in a wait-and-see mode, especially with key U.S. inflation prints on the horizon. Jeff May of BTSE notes that higher-than-expected inflation could trigger a decline, while lower numbers might spark a rally. September's historical weakness adds another layer of caution. But while the market analyzes whale movements and inflation data, another critical development is unfolding behind the scenes. The U.S. Treasury is on a tight clock to define its strategy for a groundbreaking federal Bitcoin reserve. What will this mean for Uncle Sam's crypto future? U.S. Treasury's 90-day Bitcoin countdown, a Federal Reserve reckoning. The U.S. Treasury is now under a strict 90-day deadline to lay out a comprehensive strategy for a potential federal Bitcoin reserve. This isn't just a policy discussion. It's a critical step towards the government potentially holding its first-ever crypto hoard. Lawmakers are demanding clarity on several fronts before any federal crypto assets are secured. Key to this process are details regarding custody partners, who will securely hold these assets. Equally important are the legal authorities that will govern this reserve and the robust cyber safeguards that must be implemented to protect against any potential threats. The Treasury's roadmap needs to address these fundamental questions, setting the stage for how the U.S. government might engage with Bitcoin on a sovereign level. This initiative signals a significant maturation of cryptocurrencies' role in the global financial landscape. If the U.S. Treasury successfully establishes a Bitcoin reserve, it could legitimize Bitcoin as a store of value and potentially influence other nations to consider similar strategies. It also opens up new avenues for regulatory frameworks and institutional adoption, marking a pivotal moment for Bitcoin's integration into traditional finance. Audience impact. This development has sent ripples through the crypto community, with discussions ranging from the potential impact on Bitcoin's price to the long-term implications for monetary policy. Analysts are closely watching for any signs of regulatory clarity that could pave the way for more institutional investment and broader adoption. From the halls of the U.S. Treasury to the lush landscapes of Paraguay, the future of Bitcoin is being shaped in surprising ways. Next, we explore how regulations and innovative strategies are paving the way for truly sustainable Bitcoin mining. Paraguay's green gold rush, how HIVE Digital Technologies mines Bitcoin sustainably. Paraguay is emerging as a beacon for responsible Bitcoin mining, thanks to its forward-thinking regulations and the innovative strategies of companies like HIVE Digital Technologies. In 2025, the nation officially classifies cryptocurrency mining as a legal industrial activity, requiring only a simple registration and imposing standard business taxes, not unique mining levies. This clarity significantly de-risks operations and attracts substantial investment. At the heart of Paraguay's appeal is its abundant renewable energy, particularly hydroelectric power. HIVE Digital Technologies is capitalizing on this, operating massive hydro-powered mining facilities like its Iguazu site. This approach drastically reduces their carbon footprint while enabling significant expansion. In August 2025 alone, HIVE reported a remarkable 22% month-over-month increase in Bitcoin production, reaching 247 BTC, directly attributed to their access to low-cost, clean energy. HIVE's success is built on a foundation of capital efficiency, geographic diversification, and technological advancement. They employ a unique Bitcoin pledge strategy, financing growth without diluting shareholder value through equity or debt. Coupled with investments in energy-efficient hardware and strategic site selection, this model ensures both sustainability and profitability. Their recent Phase 2 expansion in Paraguay, adding 100 MW of hydropowered capacity, underscores their commitment to growth powered by clean energy. This sustainable model offers valuable lessons for the broader fintech industry, particularly for crypto payroll services. Companies can learn from HIVE's capital efficiency and explore alternative financing. Furthermore, leveraging stablecoins for payroll can mitigate volatility, ensuring predictable income for employees while blockchain automation streamlines operations. This approach not only enhances efficiency, but also attracts talent-seeking crypto remuneration. Beyond individual company successes, integrating renewable energy into Bitcoin mining offers significant environmental benefits. It lowers carbon emissions compared to fossil fuel-dependent operations and can even enhance grid stability by acting as a flexible energy consumer, absorbing excess renewable power. While challenges like hardware manufacturing's footprint and e-waste remain, the path forward is clear. Renewable energy integration is key to maximizing sustainability. So, Paraguay is showing us how mining can be done right, but what about your own Bitcoin? Are you looking to turn your idle assets into yield? We're breaking down the latest in Bitcoin staking statistics for 2025, comparing rates, platforms, and the often overlooked risks. Don't go anywhere. And that's a wrap on today's Bitcoin Bulletin. We saw whales distributing billions in BTC, signaling a potential September test for Bitcoin, Ether, and XRP. The U.S. Treasury is racing against a 90-day deadline to map out its Bitcoin reserve strategy, a move that could redefine federal crypto holdings. Paraguay is leading the charge in sustainable Bitcoin mining, with HIVE Digital Technologies showcasing how to leverage renewable energy for responsible operations. Finally, we explored the evolving world of Bitcoin staking, comparing rates and highlighting the crucial risks involved. Don't miss out on the next wave of crypto news. Smash that like button, subscribe for more in-depth analysis, hit the notification bell so you're always first to know, drop a comment with your thoughts on today's stories, and follow us on all social platforms for real-time updates. We'll see you next time.